So today we're going to be taking a look at how much I earned in dividends over the last month. So we're going to jump into my dividend investing portfolio here on M1 Finance. This is where I'm currently focusing in mainly on my dividends, as you can see, rightly named Dividend Dennis. So let's go ahead and take a look and see how we did just over the last, couple of time periods here, as well as then, kind of breaking down which companies paid me, how much I've earned, and then compare that to like last year and even the last couple of months as well too. So you can see here, our current value is sitting at $27,240. So this is currently the highest the portfolio has ever been. We were down about $485 for the day as of this recording. If we go to the last week, we're actually still up $63, which is really nice. And then over the last month, we're still up $723. Now, the market's kind of been up and down with some tech stocks. So we do have some tech stock in here that is not technically dividend paying. So that's kind of brought the portfolio down a little bit. Over the last quarter, we're up $472, and in the last year, we're up $4,300. And for anybody that's watching, that's like, oh, that's a lot of money. That's more than I have. I like to share this every single time in these videos. I started off with $100 in this portfolio. That's all I put in, $100. And then as I got more comfortable, I kept putting in more money and growing this slowly but surely. And as we continue on, if you guys are interested in checking out M1 Finance, I will have a link for them in the show notes below. Helps support out the channel, but it gets you a nice little bonus for doing your deposit with them and then going ahead and getting started with your dividend portfolio, or even just any kind of long-term portfolio you want to use. Now, like I said, so that's kind of how we've been doing so far. I'm pretty excited. We have a couple of stocks that are, of course, non-dividend paying, like we mentioned. So I just kind of want to make sure people understand that not everything in this portfolio is dividend focused, but there's a reason for that, because I was mentioning it in a previous video where it was like saying, well, what if in a couple of years, like 10, 15 years, these companies do start paying out dividends, and then you can start getting, some really good yields on your money. And before I show you guys some more of that, just in case people are curious, the unrealized gains, which is anything I haven't sold yet, obviously, is 3,193, which is about 13.28%. So what I was talking about earlier before in a previous video was companies like Airbnb that I have right now, or like Amazon, or even freaking Tesla for that matter. None of these companies pay out dividends, but possibly in the future that can be a thing, because Apple did that before. Apple wasn't paying a dividend for the longest time, and now they are. Although their dividend yield looks really crummy because it's really low. Let's take a look at this. I was actually looking at Ross really quick too, because Ross had the same situation happen to them. So let's go to Apple. And I like to show this. So Apple right now, their dividend yield is 0.68%. So if you're buying in now, that's what you're getting at. And that's not a great yield for people who need the money now, obviously. But since we're long term, that yield is not too big of a worry for me. But check this out. In case you didn't know, you're learning something here, hopefully. So yield on cost is something where, depending on when you bought the stock, or at the price point that you paid and what the yield was, what you're getting now. Check this out. So if you bought Apple 10 years ago, not only were you getting that great growth over the 10 years, let's say you didn't buy anything more, whatever the case, maybe you put in like 10,000 and just left it there, your yield on cost would be 6.54%. That's way better than the 4% goal that most people talk about on the platform. And, I think that's amazing. And then if we go back even further, go to the max, I'm trying to think when Apple started paying out their dividend. I think it was, 2012, give or take, is when they started paying out their stuff. So if you look at this chart here, so if you bought in 2008, right, when everything was going down in that crash, even though they weren't paying a dividend, if you had bought in, and let's say you didn't buy anything more, whatever the case, maybe you just bought in and held, you'd be getting a 13% yield on your money. So I try to think about that with like companies like Amazon and Tesla and everybody else, of like, yeah, sure, they're not paying dividends now, but what if in 10, 15 years they will be, and I'm getting in at a much better price point, and so that way when that yield comes out, I'll be getting a really good chunk of my money based off of what my initial, price point was that I bought into. So just kind of some stuff to really think about. So let's kind of go ahead and go to the activities feed here on M1 Finance. Let's take a look at the dividends. Now, I'm actually recording this a day or two before I get my last two dividends, because with M1 Finance, whenever the dividends paid out, I get it at midnight the night after or something like that. So if a company pays like on the 31st of March, I get it like morning of April 1st before the trading day. So it kind of is a little funky there, but just kind of something to keep in mind. So I do have to fill in this just a tiny bit early, but I do have the numbers written down here for the 2 companies that I'm still waiting on for their dividends. But let's kind of break down what we have here. Let me make sure everything is in picture. So you're not gonna be able to see, actually you can see everything because some of these are February ones, so we don't have to worry about them. So starting on March 1st, we got paid out 2 different times. The first one was from Aflac. We got paid out $5.61. Next, we got Visa on the same day for a whopping 60 cents. So their dividend is very, very low on the yield there. Now, on the 4th, it shows it comes out twice, but it's from the same company. It's from Discover. The first one was for $3.10, and the second one was for 14 cents. And then on the 5th, we got paid out from 2 different companies. We got paid out from Pfizer for $2.94. Now, we don't have Pfizer anymore because we sold out on Pfizer a couple episodes ago. But because we still held them past their record date, we actually still got the dividends. So in case you didn't know that, I'm going to show you real quick because I think this is kind of cool to know. So with the company, let's go back to the scorecard here. So no matter what website you use, when you look at the dividend like summary here, so you'll usually see a couple dates here. So you'll see like a ex-dividend date, you'll see a payout date, record date, and a declared date. So the way this is kind of all works out, in case you didn't know, this is the day they announce the dividend and like when it's going to pretty much happen and everything else. This is going to be the ex-dividend date. This is essentially the day before is the last day to buy into the stock. Otherwise, you're not going to be getting the dividend on the payout date, which is this date right here, which is February 11th for this case. So if you buy in on the 5th or 6th of February, you're not getting that payout. But if you bought on the 4th or prior, you would get that payout. Now, the record date is a little bit different here. And this is saying that if you sell out before the 8th, right? So if you sell it on the 7th or whatnot, you will not be getting that dividend either. So there's like this like grace period of making sure that you still have ownership in this company if you want to get paid out on their payout date. Oops, kind of covered that up. But that's pretty much how these dates work. So a lot of people kind of get confused. Like if you buy in on the 5th, you're not getting in. If you sell on the 7th, you're not getting the dividend on that the 11th of this example. So just kind of something to keep in mind when it comes to going through this motion of understanding, you know, what your timeline is for buying into a company and making sure that you get the, you know, a good deal essentially. Because yeah, I was selling out of Pfizer, but I was still within that time period to get them. So next up we have here is Starbucks for $1.74. And then we have Johnson & Johnson here for $4.24. And then on the 11th, we got paid out from, let me clean this up real quick, from Microsoft for $4.87. Microsoft was actually the very first company that paid us out on here. I think it was like 2 cents that they paid us. I actually made a huge joke about it a while back just because it was like, you know, pennies, literally pennies. And now we're getting a really healthy amount of dividends from them. Obviously nothing to make huge splash with, but I think if we just keep going, they keep increasing their dividends, it's going to be really healthy long term. Also on the 15th, we got paid out from 2 different companies. We got paid out from Next Era Energy for $5.87. And we also got paid out from Realty Income, which is the monthly dividend stock, for $2.91. Now, I also did end up getting rid of Realty Income, which I know is like a cardinal sin for a lot of dividend investors, but my reasoning for it was kind of twofold. One, I think the stock for me personally was just not really good for my current goals, which is, yes, dividend focused, but because I don't need this money for another 14, 15 years, the increases that they're doing every year is not substantial enough for me to warrant holding on to that fund, because 4% is great for a yield right now, but if it's increasing the yield by like 1 to 2 to 3% every year, it's, you know, pales in comparison to companies like Microsoft or Amazon, or sorry, Microsoft or Apple, who are increasing their dividend by like 10% every year. And the other big thing too that a lot of people don't talk about is that you do have to pay taxes on dividends, right? So as you start making more, dividends actually kind of become a little bit more expensive for you to have. So kind of making sure that I align everything up properly where I'm not getting paid as much in dividends now, but over the next couple of years, it will substantially increase as these companies increase their dividends, and I have more ownership in these stocks as well too. So just a little ramble there, but I think it's important for people to know that kind of stuff. Next up on the 25th, we got from Home Depot, split it into 2 here for $6.22 on the first one and then $1.17. Home Depot's definitely becoming one of my favorites here. Also on the 25th, we got paid out from the S&P 500 index fund we have for $5.44. And again, I also don't own this one anymore either. So I sold out of 3 companies in this, pay period of like dividends that I will not be getting paid anymore. We'll see how that affects us, in the next couple months, because, these companies pay out quarterly, except for Realty Income, that was monthly. They pay out quarterly, so we'll see, in 3 months, how big of an impact that is, because typically quarter over quarter, as far as, first, second, and third quarters, usually you'll see a nice increase in growth from the quarter prior. So we'll see if that has a huge impact. I don't think it will long term. I think for the short term, we might see like slower growth, so we'll see how that works. So next up here, we have Lockheed Martin. So split it into 2 again as well. So the first one was $1.17. Second one was $5.26. Now the other 2 companies that I have not yet got paid out from, the first one is DLR. So that's Digital Realty Trust. And we actually got a whopping, what was that? $6. I wrote it down. So $6.60. Woo! Which is really cool. And the other one was actually Ross. So this was ROST. Man, this is terrible to write with. ROST, and that was for a total of $1.55. And the cool thing with Ross is last year they actually had to suspend their dividend, and they just reinstated it now. And I'll actually show you guys too. I actually had that up right beforehand because I was kind of doing some number stuff with this. But let's kind of just go ahead and show you, and then we'll go back to the totals and everything here too. So with Ross, this was kind of exciting. So they put out their dividend again. Check out their yield. Their yield is 0.24%. But remember, like I was telling you, is that if you're buying into a company now and then eventually they have their dividend announced or reinstated or whatever the case, your yield on cost is based off of how much you actually paid for the stock and what you're getting back from it. So even though the yield looks really low here, my yield, I did the math on it, was 1.1%, which is obviously still lower than a lot of other things, but much better than the 0.24 that they're giving now because of getting it reinstated. So kind of cool. Pretty interesting to see, them coming back in and doing all that too. So anyways, I added all of this up together and I put it in my dividend spreadsheet, which you guys can see here. I got to make sure it's all nice on screen. And then let's actually zoom in. So this is my spreadsheet, which, by the way, if you are interested, I have it for free in the show notes. So if you guys want to download that, you're welcome to. And then let's zoom in on here. Okay. Let me make sure it's still all on screen here. Let's go back. Okay. So right over here, you can see that our total for March of 2021 is $500, geez, I wish, is $59.43. So that is actually the highest paid month thus far across the board with my M1 Finance portfolio. Now, obviously, our goal is to keep on growing this as well too. But if we just kind of compare these things, right? So March of 2020, we were already pretty deep into our portfolio and we made a total of $4.89. So that huge increase from year over year from the same month is staggering. Like, that's huge amounts of growth that we have there. You could even look from March of 2019. That was the 2 cents I was talking about from Microsoft. That was 2 years ago that I got paid out that 2 cents, and now we're getting 4+ from them and a total of $59.43 in total in dividend payouts. So that growth is just fantastic. Now, what we also do is compare this, not necessarily to the last 2 months, because the companies that paid us again from here were the same ones that paid 3 months ago. So we want to go back from the last quarter, in the last month of that quarter, which was December. So if we compare them, in that month, we got paid out $45.04. So if you compare those two, that's also, again, a huge jump up from quarter to the next quarter in the same time period, which is great, especially because that December we got a special dividend from Costco for like $10, which was unexpected. Everything else besides that, it would have come out to $35. So even if you include that $10 in there, that's still a huge growth from just 3 months prior. So it's pretty exciting. Obviously, like I said, the growth for June right over here, so this time period over here is going to be interesting since I sold out of a couple companies. So that's going to make it where, I don't know if I'm going to hit that $59 plus. Ideally, it'd be really nice to be over $60 because that would be a huge growth, increase on that total. And speaking of selling out of some of the companies, two of the other companies I sold out of both pay out usually in like the first month of the next quarter. So that's going to be in April. I think April's going to be probably my worst month ever when you compare it to the months prior in that time period. So January of 2021, we made $25.05. And then the October time period, which is the first month in that quarter, was $12.05. So we had a nice jump from October to January, but to April, I don't know if it's going to be. I think it might be close, but I don't know if we're going to surpass January's. I think I can still be buying into one of the stocks that I have paying out in April, but we'll see how that ends up panning out for us as far as overall opportunities, because as much as I love seeing that growth, I also wanted to make sure that the portfolio was set up properly for us long term. So that's why those companies were gone. But overall, that's going to be an interesting month to see how that pans out. So you guys can hit that subscribe button if you guys want to follow along. And while you're down there, you guys can also hit the like button because that does really help out the channel. But if we look at Q1, so we're done with Q1 now. We ended up quarter one of 2021 at $117.51 with M1 Finance. So that is staggering. That is way more than any other month in total by themselves, because the one before that that was the record was Q4 of 2020, which is 87.29. So we blew that out of the water. We look at this. We made $184 in total for 2020, and in 2021 we're already making 117. So we're gonna for sure blow 2020 out of the water there when it comes to total earnings. You guys can again follow along because you'll be able to see what that ends up being, because we're going to be sharing that on our journey throughout this whole process. But it's exciting. Like, it's really cool to see. You can kind of get it from this graph right over here, like the impact. Making sure that it's on screen here for you. Like the impact right over here. This is huge. Like, you can see the differences between 2019, 2020, and already 2021 with only one quarter down. So if things stay relatively close as far as income for the next 3 months, we're already going to make more than we made in 2020. So I'm very curious to see where we're going to end up. I do this thing over here where I show how much we're making on average every single month, because a lot of people's goal is $1,000 a month with dividends, and we'll get there for sure, but we have bigger goals than that, right? We have goals to get $4,000 or $5,000 in dividends long term. So if we look at this, for the first 3 months and what we made in total, we're averaging $39.17 in total, which is not bad. Obviously it's going to keep growing every single time that we have good months, beating our averages. Next month might actually lower this average again because of the less companies that are paying out. But I think if we keep on investing in these companies that, if we go back here, these companies that are like increasing their dividends at a healthy rate and making sure that we're invested in good opportunities, good dividend growth, like it's gonna allow us to make those opportunities to get $100 a month average eventually, then $1,000, and then plus that as well too. I think it's gonna be really, really cool to see all those opportunities as well. But I think the really cool thing is long term is just constantly, paying attention to your investments, making sure that you are, focused on the goals that you want to make for the future. Obviously, for myself, because I don't need this money for that 14, 15 years, that's why I don't care about the 4% dividend yield. That's why I got rid of a lot of those companies. In case you didn't see from the previous video, just so you guys know, the companies that we sold out of, where is it? Is it not on? It's not even on this page anymore. Hold on. So it's right over here. So you guys can see here. So we sold out of Pepsi, Realty Income, AT&T finally, Procter & Gamble, and then the S&P 500 fund. And that's only because I also have a retirement account where I do have like a S&P 500 and a lot more stable stuff. So I'm not worried about it. This is definitely something for like my mid 40s to be able to use this money for travel and other fun expenses. So that's why I got rid of these companies. I just don't see the opportunity for these ones in the same way that I see for other companies when it comes to growth, comes to dividends, and everything in between that as well. But again, that's my decision. Obviously, everyone is going to be investing differently, and that's totally okay. Like, I think you should definitely keep your own path, but staying consistent is the most important thing when it comes to investing for your future, which, staying consistent with watching YouTubers I know can really help you stay with investing. So if you guys want to watch more content on the channel, check out my video right over here to kind of keep you guys encouraged to keep on investing. My name is Dennis, and I'll see you guys in that next video.